It's time now for an in-depth look at the markets here in Korea and around the world. And for that, we're joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Thanks for coming on today, Dr. Hwang.
Thank you for having me today.
Well, with the Trump administration saying it's going to put those new tariffs on China this Friday, Wall Street on Tuesday saw its biggest decline in 4 months. What happened there and in other markets?
Wall Street's main indices tumbled about 2% on Tuesday as investors shunned risky assets. The Dow closed 473 points lower at 25,965 after plunging as much as 648 points at its low of the day, while the S&P 500 lost 1.65. It was the Dow's biggest drop since January 3rd. The Nasdaq composite dropped 1.96%. It is pretty clear that this is all driven by the trade issue. U.S. officials have accused China of backtracking in the past week on substantial commitments made during months of negotiations aimed at ending their bruising trade war, prompting President Donald Trump to issue a Friday deadline to raise tariffs on $200 billion worth of Chinese goods to 25% from 10%. The surge in trade-related uncertainty comes just after U.S. stocks reached record highs, and if the higher volatility is sustained, it could indicate further trouble for the Wall Street.
Yeah, well, world markets actually down across the board on the news of these tariffs. Here in Korea, the Kospi starting out sharply lower, recovering slightly, though. Take us through the action today in Korea.
South Korean stocks spared all their losses after dropping by almost 1% right after the opening bell over the deepening trade dispute between the U.S. and China. The benchmark Kospi slid 0.41% as a close, while Kosdaq Composite dropped 1.07%. South Korean stocks fell Wednesday after a top U.S. trade official indicated that higher tariffs on Chinese goods are coming later this week, disappointing stock traders who hoped President Trump's weekend tweet threat was just a negotiation tactic. The market was very complacent for a while, thinking a deal would happen between U.S. and China. However, if we look forward, I think investors will see more volatility and lower overall returns with low interest rates. Investors need to be very cautious about escalating trade tensions between the U.S. and China.
Yeah, well, staying with trade and the associated risks, Korea has been relying a lot on memory chips for exports, which in the first quarter were in a major slump. The BOK says the current account was at its lowest in several years, as we just heard. The surplus in the goods account down below $20 billion. What do you see in that data, and where are we going from here?
In the first 3 months of this year, South Korea's current account surplus marked the smallest surplus on a quarterly basis since the second quarter of 2012. The country's exports also fell 2% in April from a year earlier, extending their on-year fall for the fifth consecutive month due to a drawn-out slump in chips and a weak demand from China. South Korea's economic growth rate could fall to around 1% if the slump in semiconductor persists due to the trade dispute between the U.S. and China. The reliance on the Korean economy for semiconductors has risen to about 20% of total exports and about 8% of gross domestic product as of last year. This is a major weakness in Korean economy. The performance of Korean stock market this year will heavily depend on the U.S.-China trade negotiations and the semiconductor industry. Unless the U.S.-China trade negotiations are concluded and the semiconductor industry recovers, the market may end up with worse than expected results.
Indeed. Well, we'll have to see what happens between now and Friday, but that's where we'll have to leave it today. Dr. Hwang, thanks so much for your insights, as always.
Thank you very much.